Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
This morning, we're expecting a jobs report here within the next 2 or 3 minutes.
Right.
What are you expecting from that?
Yeah, so what I'm looking for right now, sorry, I'm just kind of going through, making sure I don't miss it when it comes up.
I hear you.
So we've had a series of excellent jobs numbers. I was looking through some of the data today, and I have a lot of stuff on wage growth that we can get to in a little bit. But basically what we're seeing is that the unemployment rate continues to come down, but what's especially interesting is that the participation rate in the last few months has improved as well. Especially interesting is the improvement in the manufacturing economy. If you look at the manufacturing employment index, and I have the chart here, you're talking about, and this is based on the ISM data, which comes out periodically. The manufacturing employment index hit 57. Services is about, same like 51. It's a slow growth story, but manufacturing employment has really picked up. The question is, can that continue? Is this kind of a periodic? We have this confidence right now, but it's not going to continue. This is kind of a one-time deal. You're seeing the U.S. Economic Surprise Index at, it's been above zero now for a long period of time, and it tends to correct at certain points because analyst expectations come up and the unemployment, the economic data goes in cycles. So you see that kind of gravitate back towards zero, but what we have today is an extended run where the economic data has continued to surprise to the upside, and we're about to see if that's going to continue. The estimate right now for the NFP data is 180. Last month it was 235, so we'll look at the revisions on that. Private was estimate is 170, and wow, we got 98,000 jobs in March, which is against an expectation of 180.
Uh-oh.
That's quite surprising.
Yeah, I think all the surprises to the upside I think they're going to come down a little bit.
Okay, so you're going to see a big disappointment, obviously, in all those factors that we were just talking about.
Yeah.
In fact, 98,000. We haven't seen a double-digit print. I don't have all the data going back that far here, but
in my time at Narwhal, we haven't
been I don't think we've been under 150 since you've been at Narwhal.
No, that's been 8 months.
98,000. Boy, so
that's staggering.
That's really that might have a toll on GDP numbers. That's definitely going to have a toll on the Fed. So when you're talking about the employment rate, when you're talking about inflation, you also have to think about how that feeds into the Fed's calculus about what they're going to do with interest rates. Right now, they're expecting perhaps another 2 rate hikes this year, so that would take them to 3 hikes total because they already had one last month. But they get the bad data print like this, and that starts to push out. They start to push out those dots. They have these dot plots about when they expect to raise rates. So, initial read for me is, this is probably going to be depress interest rates a little more, just on the margin. So it's going to, if you have a lot of bonds, your bond portfolio might have a good day today. If you have financial stocks, they might struggle today. I think, I can't speak for a whole Narwhal, but I am, in the portfolios I manage, I'm slightly overweight financial stocks because I think the economy is generally improving and trending in the right direction. 98,000, that's a surprising number.
I've seen it miss a couple times, but never more than, I'd say, 5%, honestly. It's always been right in line. Right. Even if it misses, but to cut it in half like that.
So this is, if I had to guess, this is an opinion, but if I had to guess, what we're going to see is an initial reaction right now. And we don't have Bloomberg up. Something's happening with the TV, so we don't have actual quotes live for us. But we're going to see an initial reaction right now, but that's going to get faded, I think.
Yeah.
Because you had ADP data out. You had on Wednesday. That was, it wasn't great, but it was, 240, I think, on the private side. It was a little bit of a downward revision for previous month, but on the whole, like, you're talking about an average in the mid, in like 200 to 250 on the private side. That doesn't include public side. So you have that piece of it, and then you have the ISM data, which has been coming in better than expected, especially on the manufacturing side. I do think what you've seen in many respects is the CEO confidence has translated into greater optimism and pushing prices higher, and the anticipation of demand. But I think that people may have gotten a little bit overexcited and hired a few too many people ahead of time. What you also have is the late Easter this year. I'm not sure how much that's playing a role, but that could be a factor in terms of the employment. I really don't think weather. I mean, you can't really blame weather for 100,000 miss on the NFP number.
No.
But bear in mind that this data is so noisy.
Yeah.
It's so noisy. It can vary dramatically. I don't remember what the margin of error is, but it's somewhere like 50,000 range, or more.
That's quite significant.
So
that could almost make up the miss.
Well, I mean, 50,000 either direction, and you're there.
Right.
So we'll see what happens here. But my takeaway is that don't overreact right now. I think it would be folly to do that. There's too much evidence on the other side to read too much into a data report that is a dramatic extrapolation. It's not like they're going out to every business and saying how many people did you hire. They take a survey and they extrapolate that out, and then they come with their estimate of. That's why they have a margin for error. It's just basic statistical analysis. So I think just don't overreact to it. We'll see how the data comes in over the coming weeks. We have earnings reports coming up. That'll be interesting. Another perspective on how the first quarter evolved and what's looking for the second quarter, and how we can look at the macroeconomy after that.
Let me ask you, when this number comes out, do you typically see the market react pretty strongly, regardless of the number? Do you typically see it just kind of, jolt one way or the other real quick?
And the reason is, I think that everyone's looking for an edge, and when they see a print like this, they think that they can beat the next guy.
Yeah.
But the problem is with that is that you're competing against computers who are located extremely close to the exchange and can get order in way faster. So at the end, if you're in Marietta, Georgia, and you're trying to enter a trade on this number, you don't have an edge.
You already missed it.
You have an illusion of an edge, but it's not like you actually have an information advantage, because the information is out there. That's one of the great things, it does make the market more efficient with, internet and television. And,
right.
But in terms of allowing you to actually make money on that information advantage.
Yeah, I bet computers were making trades on that number before.
Oh yeah.
A second after it came out.
Yes, indeed. So we're looking
quite a disadvantage.
Yeah. So here's some more data. Average hourly earnings up 0.2. Expectation was up 0.2. Yes, it was just a bad print. Looking at some more numbers, the unemployment rate fell to 4.5%. That's not good though, because if the jobs number underperforms, unemployment rate falls. What does that mean to the participation rate? The participation rate is going down.
Dropping, yeah.
And that's one of the big things that a lot of people said, we have this potential in the workforce. When you're adding GDP, you talk about the labor force potential and labor force participation, how that feeds in. And if your participation rate is lower, you're just not going to have a larger labor force.
Got low energy workers out there.
Yeah, you got some massive low energy workers. So, people are going to start questioning Trump. This is going to be an indictment on Trump. He's not going to be able to tweet about how many jobs he's created because this was a bad print.
And people would argue that this is about the time that things will start catching up to things that he's done. He can't do anything within the first month that reflects.
They'll talk about, well, in March you had this uncertainty with the healthcare, you had this massive political uncertainty. We'll see what happens. I think you can't read too much into 1 month like this.
Right.
This data is too noisy for that. Weekly jobless claims showed really no sign of this. People aren't really getting fired. It's just hiring took a pause in March because it was so aggressive in January and February.
Right. All right. This has been the jobs report, and hopefully we'll be coming out with some more videos in the next couple of weeks. A lot of earnings coming up, so we'll probably research and touch on those.
Indeed.
Thanks.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.